Welcome to the BNI Partners and Excellence Show. I am your guest host today, Miguel Contreras, and today I'm joined by the amazing John Lloyd. Welcome.
Yeah, thank you for having me.
Man, I'm so excited to interview you and get to know you a little bit better. You've been on my list of individuals who I need to do a one-to-one with because of the specialty that you have and the type of business that you run. So, John, you are a private money lender, a bridge lender.
Right.
What is a bridge lender? What is a private money lender for our audience who may not have knowledge as to what it is that you do?
We help people transition properties, acquire properties. We move fast. And if somebody's in a tight spot to buy a residential or commercial investment property, we're there to help them. So it's just getting somebody from point A to B. And once they either stabilize the property or, it's all ready to, it's either refinanced or sold. So it's a short-term bridge situation.
Bridge loan. Yeah. So let's delve into that because in the past and currently too, private money lenders like yourself have saved some deals for me as on the real estate side, sales side of thing, and on the investment side. Let's talk a little bit about what differentiates a bridge lender, okay, private money lender from your conventional, mortgage loan officer or mortgage, your traditional mortgage per se.
I think especially for a small boutique fund like we are, we can move fast. I'm the decision maker. We don't have a big committee. We don't have all these boxes to check. We just use common sense. We look at the deal. Do we understand the project? Do we believe in the borrower? What's the relationship? So it's really a common sense situation where we can decide quick. The difference between traditional lenders is they got bureaucracy and they have things they got to check off and things they really don't necessarily need to make the transaction happen. It's just part of the checklist that they have. So it's just, I think, ease of doing business differentiates us from the traditional lender.
So I would say ease and speed, right? The speed factor, I think, has been a lifesaver for many an investor and many a realtor too when we find ourselves in a situation where we have a property where it's a fixer, for instance, that has a lot of disrepair, deferred maintenance that may not fly with traditional lenders, specifically for say a first-time buyer, for instance, right, that has an FHA or VA loan, and these types of property typically get picked up by investors. And I know on my end, when we're selling them, with properties like that, we really want them to move quickly. I think where you can come in and save the day is with that speed.
It's performance. It's
correct.
Can you perform? People don't call me and say, what are your terms? What are your rates? They call me, can you do the deal next week? Can you close in 10 days?
Yeah.
The interest rate is not really a factor because it's short-term money, and it's really, are they getting the transaction done? And that's the main thing.
So let's dive into that too, because I think oftentimes many a borrower gets a little too fixated on the rate. Granted, we do want to be vigilant of rates and whatnot, but if it's a short term deal where, for instance, for a fix and flip investor, the hold times are ideally going to be very, very short. So it's a matter of simple math there, right? Correct? Doing the math, the money, getting the deal, tying it up, closing fast, rehabbing it, and selling it fast and making your money.
The successful investors look at the big picture. They look at, if there's a big profit potential in this deal, they don't get hung up in details of because the interest rate is only going to be for months. Whether it's 10%, 11%, is not going to really move the needle when they're going to be making a huge added value profit on the deal. And so the people who get fixated on terms usually lose the opportunity altogether.
Yeah.
By trying to find the best deal. They don't have time. And anyway, that's just my experience.
No, and especially in the type of market that we're in with limited inventory, you don't have time to investigate every nook and cranny for a deal. Let's talk now. I know your fund, Fidelis Fund. You operate on two. Your business is a twofold business, or you've got two propositions, right? You've got the lending side. We're actually out there lending, and I want to dive into that. And you also you raise funds for your fund, so investors can either borrow money from you and invest that money, use the loan, leverage the money to purchase and invest in real estate. But you also have the capacity to have an investor provide you funds so that you can then lend out.
Yeah, I mean, we're a mortgage fund. We're like a bank.
Right.
I mean, you go to the bank, you make your deposits. The bank takes those deposits, they lend them out. We're the same way. Investors, we take accredited investors we're a limited partnership. They invest in the fund, and we take that money and we loan it out short term, secured mainly by properties here in San Diego, and we just roll those properties. And we provide our investors over a 9% return. It's not a guaranteed rate. It's based on the fund performance, but historically we've been over 8% since we started the fund in 2019. My background, I've ran a fund prior to that where we've never been below 8% for 15 years prior to that. So even when rates, several years ago were almost 0%, we were still generating 8% return to our investors. And so, and we're secured by hard assets, real estate primarily here in San Diego.
So who's an ideal investor for your fund? Granted, an accredited investor, but give us a little profile of your ideal investor for the fund.
Yeah, our ideal investor is somebody who's sort of maybe older. They've done deals. They're experienced in real estate. They've invested in real estate. They're comfortable they want to be secured by real estate, but they don't want to manage the property. They don't want to get involved in the details of owning real estate. And that's where we come in. They invest in the fund. They get a decent return that's competitive, consistent, and they're secured by real estate, and they don't have to manage it. So it's the older investor who's just maybe close to retirement or in retirement, and they want a fixed income and know their money's secured, and not in the stock market. It just goes up and down.
Right.
It's assets in their backyard. Do they? The worst case scenario, do they want to own some real estate in San Diego?
Yeah.
And that's the worst case scenario. So if they're comfortable with that and they're comfortable with the return, they'll be comfortable with Fidelis.
Which historically, real estate in San Diego has always been phenomenal. So the ideal person would be someone who may be tired of being a landlord, tired of dealing with the headaches of having bad tenants or possibly bad tenants, maintenance, insurance, wear and tear on the property, fixing this, repairing that, property taxes, et cetera, et cetera. They can, in turn, deposit their funds with you, and you can grow their money at a 8 to 9% click, right?
It's a good return. Our minimum investment is $50,000. Typical investors about $500,000 in the fund. We have close to $90 million in capital and growing, and we as general partners combined the owners of the fund have over $7 million of our own money in the fund. So we're committed to, this is a vested interest. It's not just somebody else's money; it's our money.
Yeah.
So, which is important.
You've got skin in the game.
Yeah, we have skin in the game.
Absolutely. So let me ask you, how did you get into this business? What led you to this type of financing?
I just always loved real estate and wanted to get involved in real estate, and then graduated in accounting and with a real estate minor, and just got into banking right off. Lending in San Diego, I started at San Diego Trust and Savings Bank way back in the day, and just construction financing, and just got into the real estate part of the financing. Worked at a commercial bank for 15 years, and just sort of got tired of the bureaucracy and just all the traditional things that lenders require on borrowers. It's like, there's got to be a better way. And one of my clients came to me and said, "John, you want to start a fund?" And started, so I left the bank, and from there I haven't looked back, and just been in helping people with brokerage. I do, mortgage brokerage as well. So always been in, since probably in the late 90s, been out of banking. So
right, it's lending money. So let's talk about those hiccups that you were talking about that led you to leave the traditional lending institutions. The hiccups, the red tape, the bureaucracy around it, and how it differs from the type of financing that you provide borrowers. So if you were to compare and contrast, like give us a little, differentiation between the two.
I mean, somebody will call me and say, John, I got this. In fact, we got a deal yesterday. A guy calls, John, can you help me on this deal? I'm going to acquire this property. And, I've owned several properties free and clear, but I don't have any cash, and I just don't. I've got own entities. I own a couple of businesses, and I don't want to go through all the process of providing everything all the financials, the tax returns for every entity he has. He's got to present them to the bank just to get one loan. Because I just want to pull some cash out on this one property.
Yeah.
And so we just simplify it down to first, is it good real estate? Do we like the property? Second, the borrower. Do I feel comfortable with the borrower? Especially if it's a repeat borrower, it's really easy. If it's a new one, just, we do a fairly quick background check and just get to know that person, whether it's a referral or our own due diligence, and we can move real quick. And then within days versus months sometimes for a traditional lender.
Yeah, and I know that my question that I'm about to ask is it can be case specific, but from in a general in a general perspective, your loan to value ratios and things of that sort. How do you determine that I know you have repeat borrowers, but say someone who's new to you, say I'm coming into you, I'm brand new, I'm experienced in real estate, done a few flips, but I don't have the personal relationship with you as yet. How would someone like myself coming to you, for instance, just as a hypothetical, how would you underwrite a deal, if I'm trying to tie down a fix and flip opportunity, for instance?
Again, that's why we deal with properties mainly in San Diego, because I know all the markets, the submarkets, so I don't have to, really get too comfortable. I already know the areas. So, and especially if it's not a special purpose property, if it's a single family, pretty easy to get valuations off that. And we do our own due diligence very quickly on the real estate. And as far as loan to values, we're conservative because we don't have time sometimes to get an appraisal. If we have time, we'll get it if needed, but oftentimes we don't. We have to make that call. So we will be a little more, we're not going to be pushing loan to value, like maximizing, 80, 90% loan to value. We're going to be in the 65% or less.
Okay.
Our average loan to value on our portfolio is about 60%. So it's not going to be, if they're looking for the highest leverage,
right.
We're not the guys, because it's about performance. It's
and everyone has skin in the game.
And the type of deals we do are value added usually, where there's upside.
Yes.
And when you buy a fix and flip, there's usually upside because there's value built in, whether it's because they bought it at the right price or they're adding something of value that's going to really kick up the valuation. So there's added profit where there's room for a lender like us and not just really high leverage.
Now, do you work exclusively on investment property, or do you also offer, on a rare occasion, owner-occupied purchase money or refi opportunities?
We can only lend for business purposes. So if somebody does if they wanted to pull cash out of their house, we could do that, but only if the cash was going to a business investment property.
Okay.
It couldn't be pull out cash to pay off your credit cards or go on a trip.
No. Sure.
It would have to be, and you'd have to follow it to where that money went to an investment property. So, but we can't that's really the only way we can do owner occupied is if we can tie it to a business purpose. If they were just refinance a straight refinance loan and a bridge loan on their own house, we couldn't do it because it's not business purpose.
Right, but you would do a bridge loan on, say I needed to sell a rental, but I wanted to purchase another property before I sold my rental. Would you lend on that type of opportunity?
Oh yeah. You can even do. I had an owner occupied client call me and say they want to buy another house. And at that point, whether it's investment property, owner occupied, we don't know.
Right.
But so I said, yeah, I can help you if it's got to be an investment property, and they can choose later to be owner occupied, but initially it's got to be an investment property, and we could, they own their house free and clear, wanted to buy this other house and as an investment property, and we financed it for them because we just cross collateralized both properties real quick because we were over collateralized, so to speak, but they didn't have to put any money down because I've got 2 free and clear properties as collateral. Made it easy, helped them get their property before they sold their other one because they didn't want to lose the opportunity to buy this one.
That makes sense.
Yeah.
Speed.
Yeah.
Speed. Let me ask you, what is the weirdest and toughest transaction that you've ever funded?
Oh, I think it was one in Mission Valley. It was on a hotel.
Oh, no, hotel.
It's if you know the Atwood Motel.
Yeah, the Atwood. Yeah,
okay,
yeah.
They
rehabbed it right recently or a couple years ago.
Several
Years ago, right?
Well, I was involved on the acquisition and rehab of that.
Oh, wow.
But long story short is there was probably 15 parcels. I mean, maybe not 15 in that whole. We had to assemble several parcels in there.
Wow.
And there was multiple owners on this properties. These properties were handed down from generation to, and you got multiple people involved and kids of the original owners that don't even care. And we had to locate every one of them to get a release on, and some of them lived in different parts of the country. They didn't care. They didn't know what was going on, and to track everybody down to get that deal done. We did it. Every other lender said it's too complicated, too much work. But we were able to get it done.
Now, the Atwood has I don't know if they still do, but they used to have like this really cool mid-century bar in there, right? I think so. I don't know if they kept it or not.
They didn't.
Oh, they got rid of it? That was a classic bar, like one of those like Mad Men type Don Draper bars, but they got rid of it. But you were able to finance it, so...
and it was just a bridge. I mean, we ultimately got long-term, financing for them, but the point of we came in to help them get the transaction done.
Yeah.
And that's where we come in to make it happen.
Simplify the process, bridge the deal and close it, and then they can get traditional financing after the fact. Now, tell me a little bit more. I know that, you do fix and flip. Obviously, I know now you do some, commercial properties as well. What other types of funding do you provide for what types of, businesses or real estate opportunities do you fund?
It's strictly around real estate. Mm-hmm. I mean, I've had people call me or buying a business, and I've helped them buy the business. Mm-hmm. In fact, I have a client buying a grocery store, and he's putting 50% down, and I said, man, we have to be secured by real property. Yeah. And so he just put up another property that they had. Okay. So we can get creative and accomplish what he needs to do by structuring the loan differently. And it's just thinking outside the box. And a lot of lenders, they answer the call and say, no, we don't make business loans.
Right.
But I don't. I answer yes on every deal because if I can't do it, I'll find somebody who can. And I think that's the one advantage we have is we help the client no matter what.
Can we talk a little bit about that too? How do you source the deals in that regard? If it's a complicated deal, and how do you broker it or source the appropriate funding for it to be able to close on the deal?
It's just being in the business as long as I have. It's relationships, and I've gotten lender relationships, vendor relationships for whatever's needed, whether it's an architect, whether it's a contractor, and we wear several hats. I'm a bridge lender, I'm a mortgage broker, I'm a consultant. We're working on a deal where a guy calls and says, John, can you provide financing on these ADUs, but I got to get the entitlements. Can you help me? And I'm like, yeah, I can help you. I mean, tell me what you need. I need somebody to, that provide, get an architect. I need the plans. I need to run this through the city, get the permits.
So are you advocating for those individuals going to the cities and getting the permits, or are you just kind of project managing and getting all the, the architects and designers to go out down there and
No, I've got a team of people I work with that's not we're a bridge lender, but if somebody needs something, I'm helping this client get through the whole process as a consultant. So I help them. I have a group of people with an architect and a person that's going to help me with the entitlement. I know the financing inside and out. I have other team members that help me when I need it. When a client needs it, we're going to make it happen.
ADUs are huge. I think it's a good quick solution for our housing crisis in San Diego. However, I think people don't realize, one, how difficult they are to get permitted. As much as we hear on the news of how things are getting fast tracked at different cities, but each city has their different rules and regulations and time frames for things. I mean, like, sorry, Chula Vista, but you guys lag a lot, whereas the city of San Diego is a lot faster. Yeah. But people don't often talk about how difficult it is to finance construction on real estate for ADUs and JADUs, and you've really come to simplify that process. Can you tell us a little bit about how you vet the project and how you underwrite it? Obviously, I know you're projecting as to what the value add is going to be with the ADUs, but how do you go into it knowing that, one, there's going to be, there's a design aspect, a permit aspect that could delay the process in closing out the deal?
Well, one, the borrower's got to have the capacity to do the deal and to have the resources to carry a loan or how long it takes. But it's all in the relationships that I have, the architects, the contractors. Each deal in the different jurisdictions is, like you said, is different. Knowing the architects that work in those jurisdictions. Some don't. I have an architect doesn't work outside San Diego, and he's really good, but he just doesn't do anything in any other. And then, some guys are better than others in getting through the different cities, knowing those relationships and contractors. What contractor is best for this? Some contractors I know are too busy, too small a deal. It might be too big a deal. I want to get this with the right contractor to fast track it, to get them. It's all about finding the right connections for the client.
And what are you seeing in the ADU space? What's the prevalent theme? Are these investors building one, two, three ADUs on a property? What's the trend that you're seeing right now with ADUs?
The trend is to get more, the better.
More the better, right? Yeah.
I mean, you're looking at 5 or more. We'll put it as a commercial property.
Right.
So that's sort of the goal, if you can. I'm working on a deal where, talking about the consulting process, this owner calls and I got a duplex. Can you help me on this? And I said, yeah, I can help you. So I got the right architect, got the right contractor. We looked at it. Oh, you can turn this into 7 units by expanding this building, putting one here, one there. We can convert this garage into a unit. Yep. So we took a 5,000 square foot lot that had a duplex, and we're going to put 7 units on it. Wow. And it's going to be a commercial property. Wow. And we're going to utilize a lot of the infrastructure that's there. We're going to have to add some, but we don't have to tear it all down. And I think it's going to drastically increase the value of this property. And so.
For our audience who may not have familiarity, are you in that situation? Someone's converting a duplex into a 7-unit property. Are you issuing draws, or is the client getting a line of credit which they could draw from? How do you structure the financing for those types of projects?
Well, we sort of start with the end game, and we look at, okay, if we're going to build this, okay, what this property, what's the highest and best use? What can we put on this? And then, okay, if we were to build this, what would it be worth at the end? And what's the exit strategy? Is it to sell or is it to refinance? If it's to refinance, I work backwards and, okay, what can this property support in a loan based on the conventional lending criteria? And so I work backwards. Okay, the maximum loan that we're going to get on this is X based on what can we build here. Right. And so I start there with, this is the maximum construction loan we're going to do because I can't get out of it if I fund this at this amount. Okay. So that's where our experience in knowing the back end, because we broker permanent loans, we know what the lenders need, we know their underwriting criteria, so we can easily tell you up front. If you get a loan large, I don't care if somebody tells you they can do a larger loan, you're not going to be able to get this out of it unless you put more money in. So we start there. And then, you've got to have skin in the deal, and it depends on how much equity. If you own the property a long time and have no debt, it's real easy. And if you're highly leveraged, a loan to cost isn't usually a big deal to us. It's more of on the back end, loan to value and it's not so much loan to value, it's debt service coverage on what the lender will provide financing for. And usually the loan to value ends up being 50 to 60%.
So you're reverse engineering the debt service ratio based on the rental income of the property.
And assume and then you look at what's the cost to build this. Okay, this is going to be the cost. Here's the maximum loan we can do. Here's here's the difference. Here's what you're going to have to come in with. Yeah. Just putting in, high level.
And I know we're probably going to have a few fix and flip investors watching this episode. What are your typical or what's your typical criteria or structure for financing the rehab of a fix and flip deal? SFR, three bedroom, 2 bath, SFR, Claremont, for instance.
If it's acquisition, we typically will go 75% of purchase price. Mm-hmm. Okay, and depending on what value they're adding, if it's just a cosmetic, it depends on what price they bought it at. Right. Again, we look at the end. What's the value going to be after they remodel it? And we want to be in that 60% range on the back end. Yeah. So however that works, if the value is really high, that 60%, we could provide 100% of the cost for the remodel. But we want skin in the deal, and we're not going to be if people who want the highest leverage and they want everything, we're not a fit.
Right.
We're a fit for somebody who wants us to perform, and they need to have skin in the deal.
Yeah. So I've always been of the mindset that you make your money when you acquire the property. You just get paid when you sell it, when you're doing a fix and flip. So, I'm and correct me if I'm wrong, but I'm assuming that in your sphere, your industry, you guys all a lot of you talk to one another. You know each other, and you probably help each other out.
It's a small world here in San Diego.
Now, are you starting to see only because the acquisition costs are so high these days? Are you starting to see any defaults or anything trending in that direction with tight financing and so forth?
Not right now. I just know there's only 14 as of yesterday. I was talking to a broker. There's very few foreclosures here in San Diego.
Right.
Very few. So as far as defaults, there's not that many, and because everybody has equity in their properties and they don't want to lose that equity, and they're going to make their payments. Yeah. So I don't see anything on the horizon with low inventory, low supply. Fairly, demand's high. I don't see a lot of defaults because people are going to find ways to make their payments. It's when values drop that they find ways not to make their payments. Yeah,
I on the traditional side of things, I have seen a spike in notices of defaults. But I was wondering, granted, yours is such a short term loan that they're probably just either refinancing into traditional financing or they're selling the property and moving on. But that's interesting. So I would love to interview you again in about a year and see how things are going in that space.
I think all that free money that the government gave out is gone, and things are starting to and politically things are a little bit uncertain right now. So everybody's a little cautious. But I think overall we have more demand than I have supply. So I've never lacked loan demand ever.
Now, for your fix and flip guys, and I want to pick your brain because you brought up politics, and we're not going to go political on this thing, but tariffs are a big deal. I think cost of materials. A lot of our lumber that we get comes from Canada, for instance. Granted, I know at current state, I don't know, as we're recording this, the tariffs were removed, but that's a big fear, I think, for a lot of builders too. And as the cost of construction goes higher, the need for your type of financing, I think, is going to be even more prominent. How do you see that type of a political tariff war impacting your industry?
I don't see it. I think it's more rhetoric and things that really haven't played out, and everybody's anticipating things that never happened yet.
Right.
They don't know. And so, they went through the pandemic where the prices went through the roof. Costs were Did we get through that? Yes, easily.
Yeah.
Did we get through, the Great Recession in
2008,
09?
yeah,
I mean, those are tough
those were
times.
tough.
That I was managing a fund during those times, and our investors, we lost, no investors lost any capital. But, I mean, you have to really know we're always going to come back. If it goes down, it's going to come back.
Now, let's talk about the Great Recession, because we had such a steep decline in values almost overnight. In some areas 50%, 40%, 30%. But I know that a lot of individuals during that market made a ton of money. Purchasing. You said you didn't lose out during that deal. So for investors who are cautious and maybe they think there's a recession, which you can debate whether yes and whether no, and both sides will win and both sides will lose. But how do you prepare for that when you're going through a recession as a lender, to mitigate as much as you can the losses or potential for losses when you're financing a deal in a depreciating market? Not that we're in one right now, but I'm curious because
I've been there several times. So it's just, one is relationships, dealing with the right people, and then structuring deals conservatively when the market's high and it's been high, making sure there's equity there. And like in 2009 when it did drop 50%, how did we react back then? By not overreacting.
Right.
We just paused.
Steady Eddie.
And the banks, they started just selling their notes. They liquidated everything because
I think that created more of a problem.
Totally. Yeah. We sat there and said, okay, let's just look at this. And the deals that we modified certain loans, we tacked on interest on the back. Our rates went down a little bit during that time. We had to foreclose on a few properties. But if you have a patient look at it, if the banks would have just held on to those notes, they would have been fine, and the market wouldn't have done what it did. Yeah, and that's why we got through it, because we didn't react and we didn't foreclose on everyone, and we helped modify the people. That it boils down to people and the relationships we're working.
That's sage. I think you just gave us some very sage advice for any business owner. Don't overreact.
Yeah.
Be patient.
Be patient. It's like people the market every day, you listen to the news, they're talking about these tariffs and how terrible things are. Nothing's happened yet.
Right.
And it's like,
it's all noise.
And you never know, because things change fast, and just play it out and see what happens. I mean, if you look back during the pandemic, it was like a blip on the screen for us. And we didn't lose any business. We gained more. And going back to the recession, when the prices drop 50%, that is the best time to be in the market.
Yeah, absolutely.
Or we're there to lend, and we're there to help investors take advantage of it.
Yeah.
So, and the banks during that time clammed up. Oh, we're not lending it. It's like ignorance on lending at the best time that you could lend on, because the equity is just going to go up when it comes back.
Exactly.
So I don't know. To me, it's common sense, but
it's common sense, but also contrarian thinking. The masses go this way, you go that way, and you make the most money. Interesting. The pandemic, I know it's been, it's March. It's been 5 years officially as of, I think, March 14th, at least, when we shut down here in California. But I remember the first 2 weeks of the pandemic were just no one knew what was what. It was really scary. We didn't know if this virus was like Ebola or just a cold. It turned out to be just a cold. But but I remember the first 2 weeks being just, thinking, wow, this is going to be another great recession all over again. And then sure enough, it turns out to be the complete opposite, double-digit growth, almost weekly, it seemed, during the pandemic. It was wild. It was a wild ride. So I think I'm really grateful that you give that advice. Say just, hey, slow it down, have perspective.
And that's why I'm not looking at the market and watching the news all the time, because you just stay focused on what you do. Yeah. And you look at the long haul, and in the market, no matter what, there isn't there's never been, at least in the history that I've looked at, where real estate has gone down, it hasn't gone back up. Yeah. So as long as you can weather the storm, you're going to be fine, and looking at the long haul.
So, John, you have this amazing Zen quality about you when it comes to this stuff. So how do you get that? I mean, what do you do outside of lending to give you this Zen, calm and perspective, where you can zoom out and kind of definitely see the forest and not just focus on one tree?
Well, I mean, it's not all about making money and about doing deals. You know, I love it. That's my passion. You know, doing deals, helping people. But just, you know, I like nature, getting out in God's creation and enjoying the outdoors, and that really helps me with stress levels to get out and just.
How often do you get out? I know you and I geek out on. We're fans of. How do you pronounce? Is it Cool or Kuel? The brand
I'm
that we
not
both
sure
like.
exactly, but
I
I
call
like
it
it.
Cool. I say Cool. It's cool because it's cool. But tell me about your outdoors. You know, hobbies. What are you doing out there?
You know, I love running, trail running, skiing, hiking, just getting outside, and you know, that's where I can meditate and pray and just reflect on, you know, that's where I get all my ideas, and is when I'm out running.
Nice.
You know, and I've done, you know, dozens of ultra marathons over the years, and I've run a 100-mile run, so I know what it's like to persevere. And
for our audience who don't know what they hear marathon, like, oh my God, that's a long race. But an ultra marathon, tell us what qualifies as an ultra marathon.
Anything over 50K, so which is over 33 miles or so.
What's the longest ultra that you've done?
100
miles.
I did the San Diego 100, and I mean, it's the hardest thing. I mean, it's just one of those things where it's a mental thing. I mean, you got to be in shape, but it's more of a decision you make before you start, because you're going to be in there and you want to give up, and it's like,
so you're in the pain cave.
You're in the pain. I mean, extreme pain where you go through the night, and it's brutal.
How do you prepare for that? How do you prepare for a 100-mile race?
You just, you know, you don't really need to run 100 miles to make it, you know, and you don't actually run the whole, you know, it's a lot of hiking, you know, and trail, because you're in this run. You know, it was 18,000 feet of vertical climb over the run. So it's a lot of hiking, you know, running, you know, you run some and you hike, but it's just the ability to finish.
Yeah.
And, you know, when, you know, out of 175 people, I think I finished, you know, in the top 20%. Wow. So
that's phenomenal.
You know, and when this was when I was almost 50. So.
All right, I just turned 50. Let's go. And I have to do an ultra now.
Yeah.
So you're it's a 100-mile ultra. You're 50 miles in. Your shins hurt. Your ankles are killing you. Your toes are, you know, maybe numb or just barking at you. What are you telling yourself?
I'm just saying, I've decided I was going to do this, and I'm going to finish. I mean, just to tell you a quick story on this 100, at the 50-mile markers, you pick up a bag, sort of a drop bag, like new shirt, new socks, headlamp for the night, you know, some new clothes, nothing. My bag was not there.
What?
So I'm like, nothing there. I didn't have anything to go through the night with. This guy says, hey, you can use my headlamp. I got an extra shirt. You still want to do it? You can bail out. And I said, no, I've decided, you know, I did it. So just, it's one of those things where you decide, are you going to do this? And if you've made that decision beforehand, it's easier to make it when you're in the run.
All right. And what was the sense that you had when you accomplished that, when you crossed the finish line? What was the first thing you said to yourself?
I don't know. I was just like, it's just a feeling of just accomplishment, that you did something that that was difficult, and more of a personal thing. I wasn't competing and comparing myself with other people. It's just a personal goal.
It's your own race, yeah.
And that's what's fun about ultra marathons.
Did you have a support team, you know, with you, or someone pacing you, or someone?
Yeah, you have. It's a requirement to have a pacer at night, so you have, you know, so that was helpful, because you sort of get delirious a little bit or whatever, you know. It keeps you on the track. And
did you get any bouts of delirium where you started to? I've heard of, or in any of your races, where you get this delirium where you start hallucinating or hearing things, or.
Yeah. I mean, I think it was. I didn't have any of that, but it does happen. But it was just more of, you know, like I don't know if I can do this, you know, and then the pacer encouraging you, you know. Just keep moving, you know.
Yeah.
So it was just one of those.
And what's the worst pain that you felt during the 100 or any of your ultras? What's the worst pain that you felt?
The worst is my toenail, my little toe. The toenail came out.
Oh.
And it was bleeding pretty bad. And when I got to the aid station, took my shoes off, and my nail was hanging out.
Oh God.
The pain was, and we just taped it up.
Let's go.
Got back in. It took some ibuprofen and just headed back out. That was probably the worst pain.
Oh my God, that reminds me of Ronnie Lott. You heard the Ronnie Lott story? Do you know who Ronnie Lott is? He was this awesome safety for the 49. He was my hero growing up. I wanted to be Ronnie Lott. Hit everybody hard. But he broke his pinky, but it was what do they call it? Is it a compound fracture? Or was it just completely the pinky was going that way? Oh, so they're like, "Hey, buddy, you're out of the game. If we can't tape this up," he's like, "Chop it off." Oh, what? Chop it off. So they chopped it off, taped it up, went back in the game. So
that's the ultimate.
Hey, you lost the pinky almost.
Well,
pinky nail.
Toenail. That's not.
Toenail.
Yeah.
That's awesome.
Yeah.
So ultra marathoning, you hike. What else are you doing outdoors? You like hiking or
I'm a tennis player. I play tennis. I love the tennis in college.
What's your thought on pickleball?
I like pickleball.
You like pickleball? Yeah. All right.
Yeah, but I mean, tennis is my game. I played in college and I love playing. But pickleball is fun because it's more social and it's easy and it's not as hard and it's just something you can do with just pretty much because tennis is hard a lot of times to get somebody that can play with you your level.
At the
so,
level.
But yeah, pickleball, I love it. I think it's great for the game and just gives tennis courts an alternate use too.
Yeah, they're not sitting empty.
Yeah,
that's awesome. So, great advice. I mean, shoot, slow it down, get out in nature, get inspired by nature, and then, how do you feed your mind too? Like, are you reading any literature or books that, I'm assuming you're studying the markets and you're studying finance. How do you keep your mind fed and not just, with the blinders on? How do you, because in order, I think for someone to have that sage wisdom to zoom out and slow things down, you're feeding your brain with some other stuff. What else are you doing?
I listen to podcasts and read books, and I'm a person of faith, so I read God's word and the Bible and just things that can improve your daily life. And so I look for podcasts, books, and things like that.
Yeah, and you mentioned earlier that you meditate in nature, you're praying. How does that look? How does that practice look for you?
It's maybe a little bit unconventional sometimes. Mm-hmm. It's just out there, and it may not be. I'm just being out in nature. And to me, that's just part of it, and it's not any like ritual that I do or anything. I mean, it's not like a list of things. Yeah. It's just at the time, whatever I need at that time, whether it's maybe getting out, maybe it's meeting someone to talk to them or encourage them, or maybe it's just being out on my own, in nature, and that can provide energy. So it just depends on the situation. I just sort of go with what I'm led to do.
Yeah, I feel the same. I think every time I'm out in nature, I feel closer to the source, is what I say. Yeah. I feel a sense of serenity and calm, and that just really slows things down. Oh yeah. One of my outlets too is jiu-jitsu, and my wife's like, well, you go to jiu-jitsu and you get beat up and you get choked out. And like, there's something magical that happens the minute I set foot on the mats. Everything goes quiet. I'm like, just silence the brain a little bit. Get that monkey talk. That drunk monkey talking to me. I can silence that guy and just complete quiet, silence, tranquility, peace. I come out of there just refreshed, and then that also gives me perspective to see things, see different angles, and be able to slow it down. But definitely being in nature is one of my go-to, healing or just bringing that calm into the business, because everything is so fast and faster these days.
Totally, yeah. And I love to impart other, help people in different ways, not just in finance and in real estate, but just help them, motivate them, inspire them through other ways. So
no, I've talked to a couple of the guys in our group and in our chapter, and they've mentioned how inspiring you are and how you motivate them and so forth. I know you've been able to collaborate a lot with Emmanuel and working with really amazing projects. So that's really really awesome that you embody the giver's gain mindset and mantra that we have in our chapter as well. Man, John, it's been a pleasure to interview you. So for our audience, if they want to reach out to you, because again, I'm going to reiterate this, guys. You can borrow money from John, but you can also invest with John. So if
you're looking for an investment that's secure, preserving your capital, secured by real estate, or you're looking for a short-term loan, we're here to bridge financing here in San Diego. We're the source.
And if you need a running partner to go with you on a 100-mile race, John will do it for you. Are you mentoring people? I know you ultramarathoners tend to mentor other runners, or you're like, you guys are like this little clique.
Yeah, it's a
club, little community.
Not so much formally or anything, but I get questions and helping people here and there with
that's
runs that they're working on.
Yeah, you guys have a really cool community. So, man, thank you so
Thanks
much.
for having
me,
and
thanks.
I
really enjoyed the conversation. Looking forward to more conversations. Man, I'm just excited to get to know you deeper. Thank you so much for your time today.
You're welcome. Thank you.
Thank you. If you're interested in networking with us, we meet every Wednesday at the Chula Vista Municipal Golf Course on Bonita Road, across the street from the Vons at 7 a.m. every Wednesday. We'll see you there.